Shut up and sit down.
All right, everybody, welcome back to Rebel Trading Group Podcast, episode 48. It is Thursday, my dudes. Today's date is November 1st, 2018, the day after Halloween. Too spooky. What is up, everybody? My name is Nathan Oliphant, and with me, as always, is the gluten-free Jason Bessing.
The gluten-free Jason Bessing. What's going on, Nathan?
Hey, man, I'm under the weather.
I know, you're a little sick. That's why we've had to delay doing this. It's okay, it happens, though.
We're here.
Don't have to work.
We're here, we're queer.
But you don't have to work.
Yeah.
I guess that's a good sign, right?
I guess I could be making money.
Oh, well, we're making money today, baby. We're already up 1% on the day. Added a little funds to the account. And it's a great way to stay in shape.
It's a great way to stay in shape.
It's a great way to stay in shape. So let's go ahead. Let's pop over to the numbers. The market just opened a mere 9 minutes ago. So let's go ahead and pull up Market Watch. There she is. The Dow Jones currently up at 152 points. S&P up 14.5. NASDAQ up 45 from yesterday's. A little bloodbath or a little weirdness or going on this week. And then we have gold sitting at 1231, still sitting above the 12 range.
100%.
Oil sitting at 65. Oil's taking a beating. I guess that's good for us consumers at the pump, but the commodity traders, you know, I've always found it weird that oil tends to go down with the market. I don't know. I feel like it's a safe haven kind of place. I don't know, that's just my eyes, because it's commodity backed. But yet again, if the economy is not doing well and the wallets are tight, less people are going to try to watch the gas that they're spending. And
I think people are always going to buy gas. Bitcoin sitting at $6,388.
Oh, poor Bitcoin. I keep forgetting to pull her up now that she's not on the. Coinbase makes you sign in to their shit.
Coinbase, I've said that. It's
so yeah, I'm 63.89.
88, yeah, 89, yeah.
Okay. Well, yeah. So nice little pop up this morning. Let's see if she can keep doing it, keep onto it. I'd like to see that for sure. So, anyway, anything going on with you before we kind of get rolling?
What, me personally?
I mean, just in general, in the ports and. Not much, no? Okay.
I got market news.
You got some market news? Let's go ahead and roll on over to market news with Nathan Oliphant.
Okay. Let's go over some things. What should we do first? You know, we see that bombing in the mail. We have that shooting. Always causes stir up. And
tell me about the bombing in the mail. Oh yeah, wasn't it like Obama?
It was Obama, Hillary Clinton, a bunch of what do you call it? The lady in Miami. The Democrat, Wasserman Schultz, I think. Mm-hmm. She got one. Robert De Niro, a bunch of prominent Democratic or outspoken Democratic Party members received pipe bombs through the mail from a Florida conservative man.
You know what gets me is that they actually probably made it through the mail system.
Yeah, it was tons of fucking bombs that made it through the UPS, United States Postal Service, USPS. I don't get that. How does that happen? The thing, okay, here's the thing, and I'm not trying to defend it at all, and it's like, you don't do this. You don't send bombs through the mail. That's not a good thing.
It's a no-no. That's day one stuff.
We don't do that. The bombs that he sent didn't have a trigger mechanism, no way to go off. So I think it's a stupid way to send a message.
More of a statement.
Yeah, I think it's the stupidest way to send a message if you're going to do that. But I don't think sending bombs in the mail is definitely not good.
Now, do you think it's possible that they knew that? Because, well, could that be held in court? Like, well, it didn't have a triggering device, so it really wasn't a bomb.
No, it was really a bomb.
It could have went. You just smacked on an ignition system on it.
I guess, but it was, yeah, I don't know. Like, it had all like the ingredients to be a bomb, but no way it could be triggered. So, I mean, I would know. You're sending explosives through the mail. That's a federal crime. That's at least going to give you quite a bit.
Yeah, that's not good.
It's not good. Anyways, we're gonna
Wasn't
move
good
on
stuff.
from there. You have the shooting in that synagogue and the Tree of Life synagogue. It's very sad. A
Yeah.
lot of that sometimes will spark um, gun control debate. A lot of times I like to look at gun stocks or defense stocks during those times, see how they react. Bigger market news. China has, I think they did some kind of tax cuts on automotives here in America, and we saw a lot of automotive stocks actually rally up after that news.
They
So that's
needed
good.
something, man.
Yeah,
They needed something to push them up.
that's good news from out of China. There's also trade talks supposedly coming soon. We have Trump's excuse me, Trump's tax cut plan coming. Another tax cut plan. I don't know if it's gonna happen or whatnot. So we got that. Ford recalls 1.5 million Ford Focuses. I think it was. It was over a million Ford Focuses recalled. The day that news came out, they didn't give a fuck. The stock rose fucking great. It was amazing. What else is happening? Tesla surged during earnings, and one big thing that we have coming up is next week is voting day. So we'll see who's in, who's out, who's blue, who's red, who's majority blue, who's majority red. If we still got reds in the seat, that's good for, that's generally good for fiscal policy. When we get Democrats in, we generally see a more shift towards social policy. So, and finance kind of gets, I feel like, neglected a bit. I feel like finance gets neglected when Democrats are in office. So pay attention next week and go vote.
Well, the money just kind of moves. Right now, if
because it's
Republican
a budget.
takes office, Republican takes office, they're going to increase defense spending.
Yeah.
They're going to increase oil production. They're going to increase infrastructure spending. But if a Democrat's in office, they're not going to do that. They're going to shift it probably into banking, larger, big, more corrupt shit. Add more taxes
Well,
on.
we're definitely going to see, if Democrats come into office, there's definitely going to be a huge focus on immigration and healthcare.
Yeah.
That's more of what I'm talking about.
Personally, I'd like to see a little bit. I'd like to see the Dems kind of take back something.
No.
Because as someone who is completely libertarian, completely libertarian, I like the idea of politics.
What they call an extremist.
I'm a middle wing extremist. No, I like the idea of hundreds of politicians sitting in a room looking at each other going, duh, because they can't agree on shit. And just sitting there with their thumbs up their ass. And then meanwhile, the free market will continue to kind of rule things.
Interesting perspective.
So I kind of like that tug of war that kind of goes on. So anyway, that's about it. I mean,
that's really it. Yeah, I'm sure there's some more news that I'm skipping over. So if you have any other questions, concerns, headlines that I missed, email us at rebeltradinggroup@gmail.com. That's Rebel Trading Group with 2 G's at gmail.com.
All right. So before we get into today's market terminology, I kind of had like 2 points I wanted to go over. Just kind of 2 little things that are kind of going on out there.
Yeah, let's hear it, man.
Yesterday, I was looking at Caesars, CZR. We know who they are. They own Caesars Entertainment Company. They own Harrah's Casinos,
pull it up right now,
Stratosphere, of course, Caesars Palace. They're one of the smaller casino players, but their earnings, if you look at like their numbers, they're complete dog shit. It's like an $8 something stock. What's the price on it?
$8.61.
Yeah, it's not doing well. And one of the things that's going on, well, first of all, there's been unrest since 2008 within the Caesars Corporation between just getting stable again. And on top of that, believe it or not, Vegas is actually slowing down. And I'm wondering if this is a trend that's going to stay with us. Are millennials less interested in going to Vegas and gambling as the baby boomers start to get older, die off, retire, all that shit? So much that you can see that there is unrest within the casino stocks. If you look at Wynn, if you look at MGM, LVS, Las Vegas Sands, they've all taken somewhat of a beating And the reason that is because of that slowing foot traffic. It's gotten so bad that they are actually subsidizing airlines to bring cheaper flights to Vegas. Now, I like that because, over here in Jacksonville, on my neck of the woods, I go on cruises a lot, but I prefer to go to Las Vegas. The problem is to fly out there, you're looking close to $400 per person. There's now flights directly to Vegas, nonstop, for $45. Like, it's dirt cheap to go. Granted, that's on Frontier, one of those, like, you got to pay for everything. You pay for the bags, pay for everything. But there's flights now starting much cheaper. And I'm sure that's a nationwide, maybe even global thing for the casino stocks in some of those cities to push for cheaper flights to those areas. So I kind of just wanted to bring that about. We know I like casino stocks.
Yeah.
I love casinos just as a business. Just some of them aren't run very well. And this Caesars is one of them. I wouldn't be surprised if they potentially got bought out, maybe had some sort of bankruptcy and restructuring, taken private kind of thing. I don't know, but they have a big name behind them. Caesars Palace is one of the most iconic brands of Las Vegas. And I just thought that was an interesting little tidbit about those.
Is there a what do you call those things? ETF that has like casinos or gaming properties?
There is one. I'm trying to remember it off the top of my head, but maybe it was MPL, something like that. You can find it. Just type in like gaming fund or something like that.
I typed in gaming and nothing came up.
I forgot what it was, but I remember I wasn't a fan of it because it just had poor performance, had very poor liquidity, and it paid like an annual dividend. It paid like one December dividend of like 8%, and that was it. It was just weird. I didn't get it, so I stayed away from it. But I wouldn't mind holding several of these on the pullbacks. The big story for the casino stocks is China and the Macau gaming industry over there. That's the big story with those stocks because it's right now it's not in Las Vegas. Funny enough. Second point I kind of wanted to get to. This was just every time
Blackjack.
I think that was it. BGK.
Yeah, BJK. I'm sorry.
BJK. So, every time I come across something with Disney, I always read about how it's a dividend play or like a dividend pay or a dividend portfolio needs Disney. The bitch pays under a 2% dividend. It's like 1.4. It's a horrible dividend. Why do people look at it as such a strong dividend, and why is it constantly referred to as a dividend play or retirement play?
Well, I think it's included with a lot of the other dividend players in the Dow. I think it's just, fuck it, why not throw Disney on top?
I mean, maybe it's just the security of the name, the non-cyclicality of Disney.
Maybe, yeah. That's kind of, yeah.
I just thought that was weird because 1.5, in my opinion, is ass.
It's not great.
I'm not excited.
For like $120 stock niche or $115 stock, right?
For such a large company. Well, I guess they see so much growth potential that they don't want to waste it on shareholders. But to me, I often think that Disney is a growth stock, not a value stock.
Growth stock, not value. I don't know.
I think they're gonna shift a lot of their entertainment industry, a lot of their things that they've got going on in order to kind of revamp and bring that Disney name out a little bit more to millennials and the younger crowd. It's all about millennials these days, man. They're taking over. They're taking over the markets. They're taking over the industries. They're taking over their fields. And the other people, they're dying off. They're retiring, getting addicted to opioids. So I wanted to bring that up. Watch the volatility out there. It's a good level to pick up some core holdings. Be ready to add on more. And just kind of see what comes out of this volatile time. So. Anything you want to add in there? Squeeze in there?
No.
Yeah. Agree. All right. Agree, disagree, bullish, bearish? Fuck you.
Yeah, I guess I agree.
Okay, cool. Well, let's keep chugging along. Chugging. We might have done this before, but this is again one of those important terms that you need to be familiar with. So, Nathan, for today's market terminology du jour, can you tell me a candlestick or a candlestick chart?
Yeah, we've done this before, but I can do it again.
Yeah, let's do it again.
Okay.
Let's. But now that we're on the Twitch, last time we did it. I don't think we had Twitch. So now that you can show us with the little clicker and all that shit, you can.
Yeah, I got it up on Investopedia right now.
What exactly just the four main key elements of that candlestick are?
Sure. So okay, it's a rectangle. It's basically a vertical rectangle that's standing up on a graph, and it's hovering over a time period. All right, and that rectangle represents a time period. There's actually 5 key points to a candlestick, because the period of time in the candlestick is very important.
Yeah, sure. They're all different. They have different time frames.
So if it's like a week to a week, that's the that's what it's showing you, that week to week, right? If it's from 5 minutes to 5 minutes, then that's the period. That's what that rectangle represents. And then the graph will have a bunch of rectangles next to each other, and as assumed, it would be the period after the period, next period, and the next period, and the next period. So if it's 5 seconds, it'd be the 5 seconds, and the next 5 seconds, like that. So that's course, all right? And so what it's telling you, it's either a green or a red or a white, and in other graphs it's a white or a black. The green means the bulls are in control and there's more buyers than sellers. The red candles means there's more sellers than buyers. So the top of the rectangle and the bottom of the rectangle are one of the 2 of the 4 important things of the candle. It's called the what do you call it? The head and the I don't know what they're called, but the top would be what the price opened at that period, and the bottom would be what it closed at that period.
If it on a red candle.
No, that's what it's lowest and high. It's open and closed. So if it closed lower, it would be a red one.
Yeah. So if the close was on the bottom. But
there's still open and closes,
was on the top.
There's still
and the open was on the top. But it'd be vice versa if it was a green candle, right?
Mm-hmm. Well, yeah, of course.
So whatever is on the bottom is the open or closed, depending on if it's red or green.
Yeah, and they'll color it in after when it's happening. If it's obviously going lower, the close is going to be, or the last close price is going to be red. So it's going to be a red candle. All right, the wicks. Then they have these lines that extend past each plane on the bottom and top of the candles. And they're called wicks that go above and below. And that's the highest price paid for and the lowest price sold for, right? Or vice versa. I always get that part confused. It's high and it's low. That's how it's described.
Yeah, the high and the low of that period. Because remember, because each candle let's just say it represents a 4-hour period. So that it's not just one constant price throughout that 4-hour period. So it's showing that whole window of trading time. So there's a high of that period, there's a low of the period, there's the price that it opened at that period, the price that closed when that period was over, and they started on to the next one. So yeah, those are often referred to as the wicks. And honestly, the wicks, when I'm looking at a candlestick, that's what I'm looking for. I'm looking for what ranges can I buy in and sell out of comfortably within those wicking patterns.
Yeah, I'm gonna try to bring
chart
up
pattern.
Yeah, I'm gonna
see if you can pull up a chart of either the Dow or SPY for us. Maybe on FinViz.
Oh, I guess FinViz would work. Yeah.
Yeah, a nice chart so that we can kind of see how it all.
Like just a specific one. Oh yeah, definitely we can do this.
So you would use this in comparison to a line, because a line chart, while more appealing to the eye and simpler to look at, doesn't show nearly as much information. It doesn't show us the volume. It doesn't show us the range that it trade in. It just shows us the closing price. Like every 5 minutes, it places a dot on the chart and then connects it. And then 5 minutes later, we got another dot of the closing price and connects it. But the candlestick shows us the footsteps to everything that's been going on, the whole buying and selling period, the range in which that equity traded. So I see on the Twitch you have a candlestick chart for us. So this is the tell us what chart we're looking at. Give us the time frame.
All right, so this is kind of like a different because I can't really interact with this one. The interact one is paid for. So I believe these are dailies, but they go back to July, so there would be 1-day candles.
Okay, so every candle represents one trading day.
I'm pretty sure. You could probably count that out and go back to November 1st next year. There's November right here up top, November over here, so it's probably 1 day. So going back for a year.
Are you able to hit the weekly there? And does that give us like a fatter chart or fatter candles?
No, it kind of just spreads out the timeline.
Spreads it out. Okay, yeah. Anyway. Well, simply enough. If you kind of look near the February of 2018 range, you can see that in the weekly, you can see that beautiful, nice long wick down. But on the bottom of the chart, we see how there's a large spike in volume. So that represents a lot of sellers, a lot of buyers came in at that specific time. And you see it again when you just pulled up the daily chart there. Yeah. On the October, November, we've been going through. You see those long candle downs, those long wicking down days. And as short-term traders, that's what you're looking for. You're looking for those kind of signals. Now, you can take that information and you can bubble it into all different kinds of indicators and patterns and levels and oscillators and convergence, divergence, and shit. But the candlestick, we're just kind of going over what the chart is, what it does, and how you use it. So, shows a lot more information. I like them. I look at them for smaller time period shit. So, anything else you want to add to that?
No. Nasdaq's down. I'm happy about that right now.
You are the bear.
I'm my strangles are in a bearish position. But yeah, that was a good candlestick discussion, man.
I liked it. I liked it.
Too many questions. Are cool. I look at them. I use them occasionally. I feel like I should use them more maybe, but
they're less appealing to the eye. Sometimes you don't want all that information and you just want to see what's the general movement. What's it kind of looking like? Where does it bottom out? Where does it go up and down? And stuff. But like if you're going to put on a bigger trade, you're going to look at candlesticks, right?
What do you mean?
Like if you're going to take a heavier position in something, maybe it's for the long term, you're going to buy maybe 5 contracts on it. You might kind of pinpoint it down to a closer, better price using candlesticks.
Oh, dude, for sure, yeah. Because you don't want to get like the top of a wick, dude. You just get fucked, and then you're the space of the candle sitting like 10%, maybe 5% less.
So cool. If you have any questions, comments, concerns, suggestions, insults, ideas for us, let us know. Email us, rebeltradinggroup@gmail.com. We're here on Twitch, Facebook, SoundCloud, YouTube has all of our shit. And we out here.
Yeah, why don't I plug our YouTube real quick? I'll just go to our thing.
And we're on the Stock Twits. Oof. It's always fun to play around on the Stock Twits. Anyway, so today's topic, number 48, we're going to roll back into our previous discussions.
Series?
We're going to jump back into the sector series today.
Now that we got a Nathan's back episode.
Now that Nathan is back. Welcome back, Nathan.
Welcome back, episode 2.
You did that last week. Welcome back, too. So, so far in the sector series, we've talked about real estate, we've talked about industrials, we talked consumer discretionary, energy, healthcare, and communication services. That's 1, 2, 3, that's 6 of the 12. Now there's 12. There were 11. Now there's 12. Communications being the newest. So today, want to talk a little utilities.
Grandma, Grandpa, get your checkbooks out. Time to get some fixed income.
Sector. So let's go ahead. We always start with, well, what are utilities, Nathan?
Dog, they're utility providing companies. Who do you pay to keep your lights on? There's a good chance that they might be listed on the stock exchange, either through like a parent company or someone else.
Yep. They water, power, sewage. Yep. All that goodness.
Is there any like subsects that like I'm just like not thinking of like off the bat?
What do you mean?
Like a different industry.
No, that's mostly what they are: power, water,
so I'm saying,
sewage.
Like, in the power or like the energy sector, like there's some like solar energy. I just feel like it's a different. Like, is there like different? Well, let's take a look. Let's take a look what's inside of it. XLU Holdings.
I guarantee you, right off the top, you got Duke Energy.
Mm-hmm.
Right off the top.
Southern companies in there, I think.
Southern. They're huge.
Yeah.
They're all in the South. They're
that's
Georgia, Alabama.
Here. Yeah. Apple has earnings today. I forgot to mention that.
Ooh, that'll move the mark.
Yeah.
So will Berkshire Hathaway.
Oh, nice. Nextra is the top holding with 11%. Next Era Energy.
Mm-hmm.
Ticker symbol NEE. ANEE Nancy eggplant. PG&E. Edison International, Consolidated Edison. Southern Company up top, Dominion, like you said. Duke's up there. Public Service Enterprise. Different power companies, man. That's just it. It's just power companies.
They all just distribute power to homes and businesses across the country, or a series of areas, what have you. So let's talk about let's go ahead and start with the risk reward thing. Let's start with the reward area of this. What attracts people to utilities? Why do we like them? What's good about them? What's fun about them? Why would an investor want to be there?
Well, I mean, utility stocks are known to pay like a pretty stable dividend.
Mm-hmm. Very dividend heavy.
Yeah, I feel like there's something that says like, well, what else are they gonna do with their earnings? Well, they give it back.
So a utilities company can't really grow.
Yeah.
So if you look at most of them, I mean, almost every one of them is a straight up monopoly.
Yep.
On your city, town, county, state, whatever. And the reason that is because we don't need 5 different companies' power lines going to 500 different parts of the city, So it's mostly to declutter and keep everything simple. And as a result of that, those companies can't really expand. Like, there's not going to be, I mean, yes and no, but as more cities, more communities develop, they're going to expand and grow, but they can't create new products. They can't all of a sudden start making cell phones, and we're going to get into the technology sphere as well. Like, they don't do that. They can't do that. So one of the things that they do is they reward the shareholders in the form of a fat dividend, because they almost nothing else to do with the money. And as a result of that, most of these companies pay anywhere between a 3 to 6% dividend. And it's very strong. It's a very strong dividend. There's also a lack of cyclicality within the utility sector. And we've talked about how cyclicality can destroy some of these other sectors. I mean, look at industrials, look at real estate and healthcare. The cyclicality, the political climate, that shit all affects every single sector.
Ooh, I got a side note for you right here. I'm so sorry.
No, go for it.
Ford's down 2% on the day after reports of declining sales. So.
It's okay. They knew a hard time was coming.
They were up, though. They're up. They were up from like 820 to 930 the other day. It was getting low. It was getting to like the low 8s, dude.
Yeah, it got down there, but anyway, let's bring back.
Sorry, exciting news with Nate.
No, you're good. You're good. I always like a good market update. So, but
Gotcha.
that being said, when they where was I right before that? I talked about shareholders being rewarded.
Yeah,
there's lack of cyclicality, so no political climate. So as long as people are willing to pay their electric bills and their water
pay their
bills,
electric bills?
who doesn't pay their fucking electric bill? You know, I feel, and I've said it once, and I've said it a million times. In the hardest of hard times, Nathan, the first thing I'm going to pay is my electric bill. I'm keeping the lights and I'm keeping the water. You know, you won't lose, most states, you won't lose your house if you don't pay your mortgage. You'll lose your car, you can live without that. You lose your cell phone, you can live without that. But I mean, when it comes to water and electricity, it's almost become part of our living. Well, definitely the water, I guess, but running water, you need that shit for sanitary and hygiene reasons and safety reasons. And so as long as people are paying their electric bills, these companies will make money. And that's another one of the beauties of these utility companies. They're basically just there to be cash hogs. They're just cash flow paying things. They're not going to run up on you. They're not going to quadruple in stock price in a year. It's not going to happen. You almost don't even need to watch the fucking earnings. It's a boring, slow investment that is comparable to a mid to high yielding bond between 6-5% yearly gains. And that's one of the beauties of the utility sector.
So we play it for the dividend, not for the growth.
It's a dividend play. Now that I see you on the Twitch, why don't can you pull up XLU on do the year chart?
I can pull up the year chart.
I would like that.
I wish they had candlesticks on Robinhood.
Not on they don't have it on the
web.
The web, unfortunately.
So stupid. I feel like that. I don't know. No, I bet you the
feel like it'll come.
Code.
Probably. I'm sure it's gonna come one day.
So there's your year. It's up 0.4%.
0.4%. But hold on, I'm sorry. I was trying to pull up my account here, but now I'm pulling up on Twitch. So you kind of see we've been hiking up though. We did dip down, and there's been a lot of, I wouldn't say volatility. It still continues to just go up over 5 years. It's a strong.
It was up 60-something%.
Strong but very slow grower. But it's all about the cash flow. It's all about the dividends. So the last and final big beauty part of the utilities world is that it's considered a hedge because of its lack of cyclicality and because of its strong dividends. There's no need to worry about future sales growth. There's no need to worry about the stableness of the economy. So in hard times, you're going to see utilities pop up pretty well. They will get hit with some equities, or they will get hit with other equities. They will go down if the stock market is just going down. That's a given fact. But they're going to go down less, and over time, they're going to outperform other indexes. So they're a safe haven. They're cash hogs.
So how are you trading this?
Well, I want to talk about some of the risks.
Well, what's the risk then?
That's a good question. There really isn't much risk. There is some of it, though. Most of these utility companies are controlled by labor unions. Labor unions can just decide, hey, you know what? We want a pay raise and we're not going to work until then. Well, that's going to disrupt business. That's going to disrupt profits. Might have to cut dividends. That's a drastic scenario. But it happens. It happens in the airline industries all the time. It can happen with a utilities company. You can have devastating storms like that hit close to home with you that knocks out power for thousands of people for multiple weeks, days, maybe sometimes even months, like in Puerto Rico. These devastating storms or acts of God can completely wipe out everything and then the business is literally defunct for weeks,
Dude,
if
it's
not
been
months.
3 weeks and I've been trying to get a cheeseburger after 8 p.m. and it's not happening and it's starting to piss me off.
Is power restored across the city though?
Yes, most of the city.
That sucks. That's so weird. I
Yeah.
feel like it should be up and running again, but yet again, I wasn't there. I didn't see it.
It's bad.
Yeah.
It's bad.
You would think. Just see, and that real quick, that kind of goes on with my mindset. Kind of like the rest of the country probably thinks the same way. Like, oh, it should be fine by now, right? It's not in the news anymore. No, you can't get a fucking cheeseburger, man.
At 8 p.m., everything shuts down everywhere.
And a lot of people for that. That's out of sight, out of mind. Incredible. So anyway, that some of the risks you have those storms. We talked about PGE. That's one of the
PG&E.
utility company. Yeah, one of the utility companies out in California and out west. They had they were responsible or deemed responsible for a humongous series of forest fires that I think ended up killing like some 30 people. Hundreds and hundreds of homes were destroyed, and acres upon acres of lands were just burned down, and thousands without power. And they got hit. I think it went down like a full whopping like 25%. And that shit like that can happen to utility companies. So while the risks aren't as big as sales growth might slow down, or, you know, the CEO touched a 16-year-old in Brazil, they're not all that risky, but they do carry some risk, just like every single investment does. But this is one of the safer of all the sectors. This is almost more of a safe haven, slow, very small grower, but good dividend. Utility used to make up a lot of retirement portfolios back in the 40s, 50s, 60s. It was all about buying treasuries and utility companies. That was the get rich quick, not quick, but that was the get rich, retire, set for life idea and plan. Utilities and treasury bonds. I don't hate the idea.
I don't hate the idea.
I don't hate the idea. It's just the treasury bonds are just fucking boring. So that comes back into your question earlier about how would I play this. This is for sure a long-term buy and hold. This is not a trading. This isn't a high flyer. This is just something that brings in cash flow and kind of anchors down the portfolio.
You know how I would trade this?
How's that?
Covered calls.
Covered calls.
Just run covered calls on them. Just collect dividends.
Generate income,
premium.
dividend, and cash.
Hold on to your stock.
Absolutely. And because I would go over for XLU rather than any particular utilities company, just because it has that wide, diverse, like across the country, like across the nation, maybe even some globe. S&P 500 sector wouldn't, but around the country, I'd rather have almost all the utility companies and have a little sliver of them than try to pick one and then have it get wrecked by a storm or a heat wave that comes through and people aren't turning on their heaters and making money. So definitely a long-term hold. Something like XLU, I feel could, if you kind of side with the value investing side of things, XLU to me could make up 10 to 15% of your portfolio easily. I feel like it's a good anchor. It's a good core. It's very strong. It's going to be boring. It's not. That's the thing. Like you're just going to hold on to utility stocks forever, but you're going to get 4+% a year. And if you just buy and hold, you're going to be fine.
Utility stocks.
I like it. This is one of my favorite ones. This is right next to.
You know why I like this series?
Why is that?
Because it's almost a way to like build your core holdings.
Yeah. Well, what do you mean series?
The sector series.
Oh, the sector series? Yeah, because you kind of learn like where you want to be.
Yeah.
How you want things and kind of open up the doors to risk and reward, what's going on here, what's going on there kind of thing.
Because like even if you don't like just want the ETF, you could still go like to the sector and pick out some stocks from there.
Oh yeah, you absolutely could. Absolutely. So where do you stand on that? Oh yeah, we already did you. We did you already a Cover calls,
baby.
And I'm right there with you. Do you agree that if for like a long-term retirement portfolio, this could be 10, 15? You think that's a little too not aggressive enough?
You could put a bunch of these stocks into some fixed income portfolios, and they would just pump in income.
Absolutely. This is definitely good for retirement or those beginning to approach retirement. This is something that I would put my own parents in if they wanted me to pick stuff for them. And given their age and my age and where they're at in life, I would contribute maybe almost 30 to 35% just in XLU, though. I don't know if I'd pick out individuals, but that fat dividend and fat source of income.
Yeah. Do you know how much dividends they pay quarterly?
I don't. I know annualized it's about 3.5%.
It's on the Twitch. Hey, your LYG is up 5% today.
Let's go, baby. Little Lloyd's Banking Group.
What is your call at?
I just sold a 3 call.
Oh, it's getting called away.
I'm cool with it. Get it away from me. I'll take the cash.
Out.
I'm gonna roll it into something else. I'm rolling into something bigger and better.
All right.
I think it's by end of the month too.
Nice. Okay, so quarterly dividends around it's around 45 cents ish.
Yeah. Wow, it's not bad. So what's the? Do we have a percentage?
Yeah. 3.51.
I think it's Yeah, 3.5. I was gonna say it's somewhere in the 3.3, 3.8.
It's a 53.30 stock.
Now this thing was dipping below 50 for a while, and I was excited about it. I was like, "Oh, 48.50. That's fucking time to get XLU. Time to get XLU." But it's boring. That's the only thing. It's not gonna be fun, but it's gonna be one of those get rich slowly sectors, and that's why I like it. That's right there with REITs. Those are the two cash heavy, maybe even energy, but two of the most cash heavy sectors that I favor the most are XLU and the XLRE, the real estate sectors, because of the cash heavy, slowly but surely methodology behind it. That's what I'm about. I'd rather have good REITs, good utilities than fucking Google calls and stressing there getting stomach ulcers.
That's funny.
So, anything else?
I think that's it, man. That's all I gotta say about utilities. I like it.
That's all I gotta say. I'm a fan. I don't ever think it's really a bad time to. I don't think it's ever a bad time to really buy utilities. So, well, if you have anything you want to add, questions, comments, concerns, suggestions, insults, corrections, ideas.
Oh my God, you have a fire near your house?
I guess so.
Good grief. Let me know how it goes. To see if Jason's still alive. Tune in next episode.
Tune in next week. Anywho, so what are you watching this week, my man? What are you watching for the rest of the day?
What am I watching?
Rest of the week.
Oh.
You want me to go first?
Yeah, you can go first if you want.
Did I blindside you on that one?
You might have.
All right, real quick. I mentioned it to you earlier. I am looking at CSX.
CSX.
She just had earnings, and she beat them a few days ago, and she sold off from that for show. And she was hovering and kind of topping out near the 75 range for a while, 73, 75, bouncing back and forth from that. And she sunk down on about 69 a share. So not a huge drop. What's that, about 6-7% or so? Oh my God.
Yeah, it's insane, dude.
These sirens.
Yeah, it's crazy.
Anyway, so sold off, somewhere around 12% at one point. And I just see potential opportunity. And I'm only speaking from where the chart is. So we could be in the middle of a dead cat bounce on her. She's down 7% for the month. 1.5% dividend, about a 9 PE. It's a $58 billion company. Strong volume. I don't hate it growing its earnings. I don't hate it. I don't hate it. So I'm kind of watching her from a technical perspective.
All right. Are you
What are you
ready?
watching? I'm
Oh,
ready.
baby, this podcast is about to get 20
Oh
minutes
man.
longer.
Go.
General Electric.
Oh God. I mean, she has been one of the
Coming back. Here they
market
come.
news. What in
Yeah.
the hell?
We forgot to talk about that.
Well, it's
GE reported yesterday that they're cutting their dividend from 12 cents to 1 cent quarterly. That's 4 cents a quarter. That's 92% cut from your dividend. You don't get to cut your dividend like that, and Rebel Trading Group not short that stock.
You don't cut your dividend. Did you short her, or do you want to?
Shorting.
And how's it going?
It's okay. Giving it a little time.
Just letting it kind of marinate.
Give it a little time. Don't want
Do
to
you
get
have
too excited.
Do you have a time frame on her?
End of the year.
End of year.
End of the year to go to 950.
I don't know. I still remain bullish on GE. I feel like there's going to be that time where it just comes into play.
What are they doing now? They cut another sector or another division of their company.
They're selling off parts of their power division.
So that's finance, now power. I mean, that's good that they're focusing, but I just feel like
their biggest focuses are going to be healthcare and aviation.
Really, is power? I don't know. I don't know.
Maybe they're just getting outdone on power as far as the efficiency goes and stuff like that.
So that's GE
probably just getting out. Huh?
Are there no more GE light bulbs?
I feel there still are. They might still be in some of the manufacturing parts, some of the home goods. I think they still might make some appliances.
Yeah, we have a GE refrigerator.
Is it running?
yeah, it's running.
Better catch that bit.
Yeah, so they cut their dividend. Investors didn't like that. I should have shorted it in the morning. I said I was going to, but I didn't.
Yeah, investors don't like dividend cuts, especially when they're like, I don't think they're going to cut the dividend. I don't think they're going to cut the dividend. They cut the fuck dividend.
12 cents to 1 cent? Are you kidding me?
I mean, this guy's trying to get aggressive. This new guy that's in, he wants to be aggressive.
Use that money to...
Now that he's the new CEO, he can be aggressive. He can just say, all right, fuck everything that guy did. He did it wrong. This is what I'm going to do. Here. Trust me. And he can get away with it. So maybe it's just something that needed to be done, man. Maybe. That shit was ran into the ground by aggressive fucking old people who ran the place. They got over levered to housing. What? That's part of the reason of their demise was their finance department. And then they had did you ever hear for like years and years they always beat earnings by 1 penny? They've always were able to mix their accounting numbers to beat by 1 penny. Yeah, look it up. See if you can pull it up on the Twitch there. Just Google GE beats by a penny, and I guarantee you it was over the course of like 2002 to 2010. Yeah, they always fudge their numbers. But yeah, I'm not able to find it. But they it was a common theme that was going on back then. Yeah, there it is. Dividend cut, SEC probe expands. It was from when they're going back to reinvestigate them. They're still under an investigation from old shareholders and board members that were part of that finicky accounting that was going on.
You have to find that article for me.
So it's hard for me to pull that trigger because she's already just been beaten so bad. I feel like some shorts are going to need to cover their position and buy back soon. I don't know, man. But at the same time, they're just not doing good.
So I'm short that. I'm short GE for now.
So
maybe long term, but like it's like there's no longer you can say I trust GE because of the dividend. You can no longer say that.
Or I'm in GE for the dividend.
Yeah,
it's my income.
That's like one of the things like people were saying about GE.
I honestly didn't think that they were going to cut it because it had already been cut.
Yeah.
So I was drinking that Kool-Aid too.
It's not good, dude.
Okay.
That's all I gotta say about that.
I like it. I like it long term. I like buying. I like this price down here.
Why do you like GE because of the company? Like,
yeah, I think it's still a very powerful brand name, and they still do have sectors that are good. Like their GE Aviation is doing good. The aviation industry is booming and it's actually growing and getting stronger. And same with healthcare. There's more old people every day.
What if GE hits around $6? Oh my god, I'm gonna be so rich.
That's a tall order.
$6. I think it's possible.
That's a tall order.
Yes or no? End of year.
No.
2 months.
That's like another. Days. That's like another like $40 billion in market cap. It would have to shed off.
It's a priceless trade, man. I don't know.
We'll see, man.
What if do you think they could afford a split?
I don't think that they. Why would they split?
I don't know.
It's already cheap.
No,
like
reverse. Split? Yeah, reverse.
Oh no, they won't reverse split. Not at $10. They won't reverse split till they're at like.
Okay, not reverse at 10. I'm talking more like 6 or like they're getting down to 5.
Nah, I don't think they would.
Wow, that'd be so cool.
That's expensive to do.
I bet, yeah.
You have to like restructure all your financial books and stuff, and it's not just a thing that you can decide to do one day and do tomorrow.
I can imagine.
Yeah, get investment banks get in on that shit, and they get a cut, and all just to keep your price up so you don't get delisted.
Yeah.
Pretty drastic measure. You don't reverse split because things are going great. Look at that fucking downtrend, man. Jesus Christ.
Excuse me.
I'm just looking at that GE chart that you have up, and it's just, that's a disaster.
Look at all that red. One thing we didn't really mention, or maybe you did, was the volume underneath the candlesticks.
I brought it up a little bit, how you can see some of those long wicking tails on spikes of heavy volume there.
Yeah.
Yeah. All right, man. Well, I think this is a podcast.
Mm-hmm.
If you have any questions, comments, concerns, suggestions, insults, corrections, ideas, join us and be part of the conversation, be part of the community. Email us, rebeltradinggroup@gmail.com. We're on YouTube, SoundCloud, Facebook, Stock Twits. Get on there. I have fun on Stock Twits. Told everyone to buy the fucking dip on CHK yesterday.
Unbelievable.
So I don't know what shot's gonna get fired out of this cannon that I got here today. So we're gonna see. Anything else, man?
We have to do another podcast before Sunday.
We will, because we're gonna do our 50th on Monday.
Yes.
So we're gonna have we can do another podcast.
We can do it right after this one. Let's do it.
Just double sods.
Yeah.
That's a lot.
That is a lot.
I can do it. I don't want to find another thing I'm watching though.
That's okay. We'll just do another sector.
Okay.
All right. Okay.
We'll take like a 10-minute break and we'll just roll into it.
Yeah, that's fun.
Dude, I'm down. Let's go.
Let's do it.
All right. Well, that ends it. That ends episode 48. Stay tuned for the double feature.
Get ready. We're trading live with RTG. Let's go.
Shut up and sit down.